If you run a Shopify store, the money hitting your bank account is probably not your sales. It is a settlement, and that difference matters. That deposit has already been shaped by payment fees, refunds, discounts, and timing. Treating it as revenue can quietly distort your entire financial picture. The fix is not complicated. You need a repeatable monthly way to connect Shopify activity, your accounting records, and the deposits in your bank. In this video, you will learn the payout equation, the clearing account method, the monthly workflow, and how to investigate a difference without guessing. By the end, your bank reconciliation should become a quick confirmation step instead of a month-end detective project. Here is the idea to remember from the start. Your payout tells you how much cash arrived. Your books should explain why it arrived. Let's use a simple example. Your store records $10,000 in customer orders during the month. That is your starting gross sales number. During that same period, you issue $200 in refunds. Shopify also takes $300 in payment processing fees. So your bank receives $9,500, not $10,000. If you call that deposit sales, you hide the real story. Revenue is understated. Fees disappear inside sales. Refund activity becomes hard to spot. And your margins start giving you the wrong answer. The basic payout equation is simple. Gross sales minus discounts minus refunds minus payment fees plus or minus any adjustments. The result is the net payout. That is the amount you expect to match when Shopify sends money to your bank. The important part is keeping each component visible. When the pieces stay separate, you can see what is really happening in your store. That visibility helps you answer useful questions. Are discounts growing? Are refunds unusual? Did processing costs change? Is cash arriving when you expect? It also keeps sales taxes, shipping income, gift cards, and other pass-through items from quietly distorting your operating margins. The easiest bridge between Shopify's detail and your bank deposit is a payments clearing account. Think of it as a temporary holding room. It is not extra cash. It is a temporary place in your books where Shopify activity waits before the payout clears the bank. First, gross sales enter the clearing account. Then, discounts, refunds, and fees reduce the balance in their proper accounts. When Shopify sends the net payout, you move that exact net amount from clearing to the bank. The payout should clear the balance for that period. This gives you a clean one-to-one trail. Shopify detail, clearing account balance, then matching bank deposit. Nothing has to disappear along the way. Stores using more than one processor may want separate clearing accounts. The goal is simple. Every deposit should trace back to its source. Now let's turn the concept into a monthly routine. For many smaller stores, this can take 30 to 60 focused minutes once the system is set up. Start by choosing one consistent close date. Align your Shopify review with your bank reconciliation, and avoid letting small questions accumulate for months. Step 1. Export the Shopify payout report and transaction details for the period you are closing. Do it before you open the books. Save those files in a clearly named month-end folder. This small habit makes future reviews, tax preparation, and CPA questions dramatically easier. Step 2. Post gross sales using the same payout periods you are reconciling. Keep sales taxes separate from revenue in the correct liability account. Step 3. Record discounts separately. A discount is not a payment fee. It is a reduction of sales, and that distinction is useful. Step 4. Record refunds in the period they happen. Keep the refund connected to the original sale, rather than rewriting a past closed month. If a refund affects a processing fee, capture that fee adjustment too. You want the financial trail to make sense to someone reviewing it later. Step 5. Post Shopify's payment processing fees to a merchant fees expense account, separate from sales. That separation makes monthly reporting much clearer. Step 6. Use the clearing account to gather the activity for each payout period. Its ending balance should equal the expected deposit. Step 7. When the bank deposit appears, match it to the clearing account entry. That match should bring the payout balance to 0. Step 8. Save your support. Keep the payout export, the bank statement image, and your reconciliation worksheet together for that month. It is tempting to automate everything. Automation can save time, but only if the mapping is checked regularly and still matches your real workflow. A small mapping mistake can hide for months. For example, refunds posted as discounts may not look dramatic, but they will blur your business decisions. Payout timing can also cross month end. If an order is placed late in the month, but the payout lands next month, document the timing instead of forcing it. Consistency matters more than speed. A simple routine completed every month is more valuable than a perfect system that only happens twice a year. Your essential monthly checklist is short. Export reports, post the components, clear the payout to the bank, review the difference, and archive support. What if the clearing account balance does not match the deposit? Do not plug the difference. Use a consistent investigation process instead. First, confirm the payout ID, the payout period, and the bank deposit date. Payout dates do not always match individual order dates. Next, compare each payout line to your books. Sales, discounts, refunds, fees, and any adjustment shown in the Shopify detail. Missing fee lines are common, so are refunds that appear in a later payout. The solution is evidence, not a guess. Watch for holds, reserves, chargebacks, currency effects, or late adjustments. These can explain why a payout differs from what you expected. Build a quick reconciliation worksheet. Gross sales, less refunds, less fees equals the expected deposit. Then compare it to the bank. Save the Shopify export and the bank evidence with the worksheet. Your future self should be able to understand the difference in 1 minute. If you resolve a variance, write one short note describing the cause and your fix. Those notes reduce repeat work later. Here is an example. Gross sales of $12,000, refunds of $400, and fees of $360 produce an expected deposit of $11,240. Once the worksheet, clearing balance, and bank deposit agree, you have more than a match. You have an explainable record. Reconciliation keeps the books accurate. A short owner review turns those accurate books into decisions you can actually use. Start with the payout report. Scan for unusually high fees, withheld amounts, chargebacks, or adjustments that need a closer look. Next, compare gross and net sales. Then look at discounts and refunds as a percentage of sales, not only as isolated dollar amounts. Review the profit and loss statement for changes in revenue and merchant fees. A small percentage shift can matter as your sales volume grows. Finally, check cash timing. A profitable store can still feel squeezed if payouts land after inventory bills, advertising, or payroll come due. 5 focused minutes each month can surface issues early, before they turn into a difficult cleanup project at tax time. Consider bringing in a bookkeeper or CPA when differences keep repeating. Multiple processors complicate the workflow, or your books no longer show gross and net clearly. The right professional can help establish clean mappings, reliable imports, approval controls, and a process your team can follow every month. But the foundation stays the same. Separate the pieces, use a clearing account, match each payout, and keep the supporting evidence. Remember, the bank deposit is the end of the story. Shopify's payout detail tells you everything that happened before the cash arrived. When you can see gross sales, discounts, refunds, and fees clearly, you can make smarter decisions about margins, pricing, and cash. When you reconcile payouts this way, your books stop hiding the decisions that matter. You can see where cash came from and what changed along the way. Let's return to that $10,000 example. Gross sales belong in revenue, even though only $9,500 actually reaches the bank. The missing $500 is not missing at all. It is the combination of refunds and processing fees that you recorded separately. That is why recording the deposit as sales creates a false answer. It makes your revenue lower than reality and your costs less visible. With a clearing account, the math can be reviewed in one place. The detailed activity enters first, Then the exact payout clears to bank. Suppose a customer refund lands in the next payout instead of this one. Record it in the period it appears, then leave a short timing note. If a fee is reversed with that refund, record the reversal too. Small adjustments are easier to manage when they stay visible. Give every close folder the same structure: payout report, transaction detail, bank evidence, reconciliation worksheet, and a note for exceptions. Include the payout ID and the deposit date in your worksheet. Those two reference points solve many questions before they become problems. If someone else prepares the reconciliation, the owner should still review the result. A quick monthly sign-off strengthens a small team control. Keep refund permissions deliberate. The person issuing a refund should not be the only person reviewing the final payout reconciliation. Use a simple close checklist rather than relying on memory. A documented routine makes the work easier to delegate as the store grows. Once the routine is stable, automate repetitive entry carefully. Then, keep a periodic review step to make sure the automation still maps correctly. If you use more than one payment processor, do not blend them into one unexplained deposit bucket. Separate clearing accounts, preserve traceability. Marketplace remittances should stay distinct from Shopify payouts. Different processes have different fee structures, timing rules, and supporting reports. If you sell internationally, watch for currency conversion effects. The payout detail may include a settlement difference that needs its own explanation. If cash feels tight even when sales look healthy, compare payout timing to upcoming inventory, advertising, payroll, and fulfillment commitments. The habit to keep is simple. Never force a number just to make the reconciliation look complete. Find the evidence and explain the difference. Shopify bookkeeping becomes much simpler when you separate the parts. Record gross sales, discounts, refunds, fees, and the net payout on purpose. Then use a clearing account to connect Shopify's activity to your bank. Each payout should be easy to trace, match, and explain later. This video is general bookkeeping education, not individualized tax or accounting advice. For a complex or persistent issue, consult a qualified professional.